The European Central Bank says financial markets are out of sync with the geopolitical and trade uncertainty. Are investors underestimating real risks like trade tensions or delayed monetary easing?
Investors a couple of months ago were very nervous about the tariffs and the tariff wars that spread across the world. And since then, we saw a huge dip in stock markets across the European Union. If we look at Germany, for example, the rebound has been astonishing. The DAX index right now is currently at a record high. So I think there's been a lot of optimism surrounding, easing of the tariffs and coming to, conclusion, reaching trade agreements. So I would agree that investors are a bit too optimistic. I still think there's quite a bit of uncertainty before we see any kind of stabilization in world trade.
Hmm. Well, how serious really is the threat of these rising tariffs to Eurozone growth and the banking stability based on the ECB projections?
Well, the effects of tariffs are not felt immediately in the economy. I mean, stock markets, of course, react on a daily basis, and this is why you see the, volatility that we have seen this year. However, the effects of tariffs, even though, we're talking a brief few weeks to to maybe a month or so of tariff increases, will not be felt in an economy for 3 to 6 months.
Hmm. With the Eurozone banks increasingly exposed to the US dollar, how vulnerable are they to external liquidity shocks? And can the Fed ECB swap lines be relied upon pressure builds, if pressure builds rather?
Well, during past crises, of course, we've seen the ECB and the Fed collaborate on, opening up the liquidity lines, and I think they've been very effective in that. However, if you're talking about, the euro versus the dollar or the sterling versus the dollar, right now the British pound and the euro are at their highest level versus the dollar since the early 2022. So of course, yeah, if banks with high exposure to dollar, unless they're hedging them, they will be under pressure as a result of this, forex.
Then do you think that Europe should consider reducing its reliance on the dollar for systematic stability in the long term, or it wouldn't make any difference?
Well, that's easier said than done. The Europe and the U.S. rely on each other, and of course, there's a codependency, especially when we're talking about if you look at throughout the past two decades, collaboration between the ECB and the Fed, especially during times of crisis. I think they do depend on each other. So any kind of easing or, like you say, moving away from the reliance on the dollar, I don't think that's realistic. I think it's more of working together and trying to solve any kind of external or internal shocks together.
Mr. Rifai, what are the broader implications of the European Union stepping in to fund Radio Free Europe after the US halted its support?
Well, I mean, the main reason for U.S. halting support obviously is, their claim for, free speech, as well as trying to reduce funding of federal programs on unnecessary items. So I think that's the category they're using to justify this. But the EU, of course, their policies have been different. And as you know, the U.S. has criticized Europe for their stance or for their what they view as, blocking free speech.
Mhm. In the UK, inflation hit 3.5% in April, driven by services and travel costs. Is this a temporary surge due to the Easter holidays or a sign of sticky inflation that the Bank of England should act on?
I believe it's a sign of stickier inflation because if you look at the underlying factors, you mentioned a few, but obviously some of the others are increases in utility charges, increases in council tax, which of course that is sticky, that doesn't come down, and as you mentioned earlier in the program, rising property values. So I think those factors, would tell me that this is something that the Bank of England needs to pay close attention to and maybe react to fairly soon.
Mhm. Well, the rising prices and the wage growth is still weak. What does that mean for the household resilience and the economic recovery?
Well, since the post-COVID recovery, we've seen, enormous amount of increases in housing and housing-related costs, which has put pressure on, of course, UK households. However, you know, in the past or in the past couple of years, we've said this has been, overshadowed by the fact that wages have been rising fast. But now we see wages rising at a much lower rate. However, these other costs continue to rise. So of course, that's going to squeeze consumer spending and squeeze households' ability to maintain, either current debt levels or their current payments.